Hi, everyone. It's Tom Derry, CEO of the Institute for Supply Management, with some highlights of recent research we've published on the ongoing effects of the COVID-19 pandemic on global supply chains. The top three concerns reported by companies are now concerns about the financial health of their tier one suppliers, the ongoing concerns about the massive delays in shipments, and then the prospect of returning to work and whether we're going to have a remote work posture and what that might look like going forward. The business financial impacts are mostly positive. Our respondents say people expect revenue to grow about just under 8% in 2021 compared to 2020. And they expect to invest in CAPEX at a level 4% higher than the previous year. In fact, there's a lot of commentary in our data that people are investing in more technology or automation or robotics to become more efficient in meeting higher levels of demand, particularly in manufacturing. Demand, by the way, is expected to increase by 10% over 2020. That's a pretty significant uptick. And we continue to see prices paid for inputs much higher across the entire economy in the United States this year in 2021, which is following on a year in 2020 where that was also the case. So there's a lot of commentary in the news about a potential surge in inflation in the U.S. And I know we're all watching that very closely. Meanwhile, lead times continue to be a real issue, and a lot of that story continues to be due to shipping and logistics. Lead times in the United States are about 77% higher than normal. And a lot of that has to do with either congestion at the ports or the lack of adequate trucking capacity domestically in the U.S. In China, lead times are still at more than twice the normal length, 102% of normal. Not that that's a supply side shock as it was last March, February and March. It's more about the inability of the global transportation system to reach equilibrium in terms of supply and demand and getting the balance in place for containers and for cargo ships. Europe is still 93% higher than normal. Many of the same shipment issues out of Europe as out of China. Manufacturing capacity is about where it needs to be for the long-term health of manufacturing. It's 87% in the United States and 86% in China. Both numbers are about where you'd expect it, the long-term run rate to be for a healthy manufacturing environment. In Europe, it's a little lower at 76%, and I think that reflects the wave of lockdowns that continue to impact European economies more recently in the spring. Finally, a big adjustment in terms of inventories, and it'll be interesting to see how this continues to play out. 56% of firms say they are intentionally holding more inventory than usual. And to me, that means they're concerned about more disruption scenarios. They're concerned about maybe buying ahead on inventory if they're anticipating prices going up and wanting to buy ahead of those price increases. And they're concerned about the operating cadence and being able to keep up with the higher levels of demand. So it'll be interesting to see whether those inventory levels return to more historical, sort of lean type levels in the future, or if there's been a change in sentiment, a somewhat more permanent change in sentiment about maintaining inventories to ensure capacity and production. In terms of the workforce, we've got a lot of firms concerned about returning to work remotely and protecting the safety and health of their employees, but we are expecting the workforce to increase by about 5%, hiring to pick up by about 5% overall in the economy, and we're expecting wages and benefits paid to go up by more than 5%, as much as 6%, as companies clearly feel the need to compete for labor in this tight labor economy. There are many unfilled positions across the U.S. economy, across many companies, and certainly companies are responding by increasing wages and making benefits more attractive to compete for the labor force. So those are the highlights. I look forward to hearing from you, and I encourage you to go look on the ISM website for other details.